This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Morning, you're with us here on a fresh new edition of Bazaar Morning Call, Friday, and it's going to be hopefully a good Friday because after many sessions, US markets were constructive. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's the start of an October series, right? And I think the last 3 or 4 years in the October series, we've never seen negative returns. Always positive returns. So this time around, it'll not be too bad.
Yeah, I mean, October traditionally has been a good month. If you look at the last 10 years, 9 out of 10 years, you've had the Nifty being positive in the month of October. So hopefully that continues. But yesterday was a rather weak close.
Absolutely. Actually, Nigel, September is usually bad. But the quarter, which is September, October, November, I mean, actually, all the way till the end of the year, that entire stretch is very positive. So September gets negated. I mean, that's essentially, and not just here in India, but in the US as well. So hopefully that's what we'll get this time around as well. Let's quickly tell you what you need to know, because, I mean, things are different. I mean, things are very different. Stuff we're waking up to as compared to the last 2 or 3 days now. Let's just sort of start with that. So a constructive session in the US after many days of, I mean, long faces on the back of yields, dollar and Brent. All three, the trioca of problems as we've been calling them, have moved in the right direction, or the direction that, is constructive. So the 10-year US yield hit 4.68%. It closed at 4.57%. So although the day-on-day change was only 3 basis points, from the highs, the 10-year fell a full 10 basis points. So that's quite something. Dollar index came off about 0.5% or so. 106.16 is what it came off to. I mean, that's the other problem area. It had kind of gone up closer to 107 to 100 as compared to 106, but it's now closer to 106. Still uncomfortably high, but there is some relief. Oil prices also sort of came off the boil a little bit, and they were down 1.5% to about 95 as far as Brent is concerned. Equities were higher, so you had the S&P 500, which was up about 0.6%. The Nasdaq was up almost a full 1%. I mean, actually, it was pretty broad-based. If you look at the Nasdaq, if you look at the S&P, I mean, you look at the subsectors. I think on the S&P, 11 out of the 13 sectors actually ended higher. I think utilities perhaps was the only one which was still lower. Otherwise, broadly, it was a pretty good day. Now, the question is, with what we've seen last night, the U.S. market has made a bit of a trading bottom, right? I think it's a legitimate question to ask. The only problem is we won't know because you got two things lined up. One today and then one over the weekend, which I think are important and which could kind of spoil the mood. One is PCE inflation data out of the US. That's the preferred measure for which the Fed and the FOMC, the rate setting committee of the Fed looks at. That we get later tonight. You want a sort of number which kind of tells you that inflation is coming off nicely, and I think that will help markets build on the gains. Yields will come off, dollar will come off. If it's hot, I mean, then you basically have a problem on your hands. The other thing is the US government shutdown, which still looms, right? I mean, it's this weekend, and we still don't have a deal. As we've said, I mean, over the last so many decades that this problem has been around, it always gets done. So hopefully it will. But at the margin, one is starting to hear chatter that will we actually get a full deal? So that's the other one which I think we'll have to sort of deal with when we come back on Monday morning. I think a question can be asked with regards to India as well. Yesterday was a complete washout, right? The Nifty was down 200 points, a little less than 200 points. Did we see a bit of a panic bottom on the Nifty as well? In part also, and perhaps exasperated by the fact that we had the monthly expiry. Again, the answer to this depends on stability in US markets, and that kind of goes back to the two factors that I mentioned earlier. If you want to look at levels, we basically on the Nifty need to trade and close above the 40-day exponential moving average, which stands at 19,624. Not just an intraday move, but a close above it. That's going to be the first marker that maybe, the market is putting some of this weakness behind. On the downside, the support will come in at 19,444, which is the 78% retracement of the August bottom to the September high. and we are not very far away from that level either, about 100 points odd. Bank Nifty closed below its respective 78% retracement yesterday. The Bank Nifty, by the way, is also below the 20-week moving average. That is a much longer kind of, slow-moving average, which is the 20-week moving average, which is 44,570. But this is the weekly close, and that's a longer moving average. So give it the benefit of doubt, and watch for if the Bank Nifty in today's session can reclaim that 44,570 number and trade above it, close above it. I think that will be a pretty good outcome for the Nifty Bank as well. So we are in a kind of a tentative zone because of what's going on out there in the US, and of course the data today and the government shutdown thing tomorrow over the weekend. The advice would be the gift nifty I think would be indicating a higher start. But if you're trading, I would just still say stay on the sidelines more than anything else. Watch where this market wants to go. Let it settle down. Let some of these cues be out of the way. And then take a call, irrespective, or rather than trying to chase any small move that may be developing here or there. Absolutely flat on the gift nifty is what the opening is indicated. Sonia.
Absolutely. I think it's best to be a bit cautious in the market, considering what we've seen over the last many days, right? You've not seen any major conclusive recovery in the market. So hence the sell-on rally is something that perhaps can continue. Even yesterday, the Nifty, after going through the motions, closed at the lowest point of trade. So it was not a good close at all for the Nifty yesterday. And it's a 1-month closing low that we're looking at. So give and take everything. It's just, perhaps prudent to be a bit cautious in this market. There was a rebound in the US markets, yes. But since it's a sell-on rally market, that's something that can play out. And remember, we are heading into a long weekend as well. We're shut on Monday. So the traders may not want to leave any of their positions open. You never know what happens overnight in the global markets. That's also because of what the trajectory has been, right? The S&P 500 and the Nasdaq have seen their worst month in September in this entire year. So September has been the worst month of 2023, with a fall of almost 4.5% to 6% across the board, whether it's S&P 500 or even Nasdaq. So in that context, perhaps traders may not want to leave any of their positions open by the end of trade today. But having said all of that, it's the start of a brand new series, the October series. And if you map the last 3 years in October, you've had a gain of anywhere between 1.5% to 8%. So the street perhaps is going into October with some positive expectations at least. We have a lot of cues coming through. There are the auto sales as well that come out on Sunday. So we'll be reacting to that on Tuesday. But this is the last day of trade before the auto sales comes through. So a lot of big events lined up. But for now, I think it's still prudent to be a bit cautious given what we've seen over the past couple of days.
Well, that's right. Second half of September, we lost our way, Sonia. Lack of positive triggers. The market showed some bit of fatigue. And also the global cues were a tad bit weakish. Yeah. So that explains why September was weaker. But can we have an October fest, so to say? Because history suggests that October is normally a very, very good month for the Nifty. 9 out of 10 times, well, we have had positive returns. And the 10-year average is roughly around 3.5% to around 4% odd. So that data point, I think the bulls will grab with both hands, because yesterday the close was a little bit weakish. How are the FIs positioned, by the way? Well, the FIs on index futures at the start of the series, well, the long positions are down to around 31%. And that's the lowest we have seen in the last few months or so. The last time we had the FIs net short on the index at the start of a series was in May. When, in fact, they were net short by close to 20,000 contracts. This time around, they're net short, but now they're net short by close to 57,000 contracts. Remember, in the past, we've seen this number even balloon up, even from here. But if you're looking at it, you'll say, why do worry? If you want to refer to May, well, May ended on a good note, but that's because there were a lot of shorts in the system. So the bulls will be trying to latch on to that point as well. They are net short, but maybe not such a bad thing. If we can get some good news from somewhere, well, that's something that the bulls will be looking forward to. Remember, we have earnings to look forward to, and we also have the RBI meet. So those will be the two triggers for the month of October. Now, the big question is, besides the Nifty, I just want to understand whether or not it's time to switch to banks in comparison to IT. Year to date, if you look at it, the IT index has been a relative outperformer in comparison to the banking names. So is this trade likely to reverse now? Will banks come to the fore, and will it take the driver's seat? And I say that because banks, well, in terms of valuations fundamentals, they're better placed. Here is softer guidance coming in from Accenture overnight, and also yields that are moving up in the United States that normally weighs on IT stocks. So will this be the time, the final quarter of the year, could we see a bit of a switch happening from IT names to banking names, and can banks outperform from here on? We'll know that in a couple of months from now. On the Nifty, two levels, the 50 and the 20 DMA, they need to be conquered on the upside to get a further flow through. So that will become a bit of a near-term resistance. It was a support, now that becomes a resistance on the upside. Ingredients, though, are in place today for a good session. Yesterday, part of the fall would be expiry related. So normally you see a bit of a bounce that takes place. Overnight, all the cues that are stacked up, well, they're positive. The yields have cooled off, the Brent crude prices have cooled off, the dollar index as well as cooled off, and the US markets are positive. So you get a good session today in all probability because the ingredients are in place, but a fresh breakout only once the 20 DMA is conquered on the upside. The GIFT Nifty for starters is suggesting more or less flattish start. So we could have a bit of a good day. But for me, more than the Nifty, I'll be looking at the broader markets because yesterday, yes, the Nifty played out expiry, but the breadth of the market was worrying. And yesterday, after a while, you had the mid and the small cap indices that actually did come in for selling, and the mid cap index was underperforming. So I'll want to see whether or not that outperformance that we have been seeing can continue. Yesterday was a bit of a breather for them.
Okay, by the way, there's also a lot of selling from FIIs, right? There was almost, about 3,400 crores of selling that we saw in the cash markets yesterday. And given take, September has been a pretty weak month. I mean, FIIs have pulled out almost 22,000 crores from the markets in September. So I guess the bulls are happy that this month is going to end. And this is the last trading day of September. Well, let's take you through some opinion as well on the equities front. We have Lawrence Belanco of CLSA who says that following the July-September price momentum divergence, the Nifty has seen a correction back to dual support provided by the 20 DMA and the 50 DMA at 19,640 to 19,797. He says below this confluence of the moving average is a shelf of support provided by the August lows at the 19,229 to 19,230 area, and then the major support zone is at 18,493 to 19,000 area, which includes the 200 DMA and the 2021 and 2022 highs.
Okay, some money market views now coming in. This is V. Lakshmanan of Federal Bank, who says that the US dollar index took a breather yesterday after hitting 10-month high levels of 106.84. He says the US 10-year yield is at a 16-year high, along with crude oil prices, which are trading at 11-month highs, exerting pressure on emerging market currencies. He expects the rupee to trade in a range of between 82.88 to 83.48 to a dollar for the next few trading sessions.
Okay, and on the bonds, Lakshmanan says the market continues to be under pressure from higher crude and US yields. He says weekly auctions have seen muted demand, and he expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.3% in the coming sessions.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit in our special top 10 segment. We're looking at HOEC, Quick Heal, Chola Investment, Imami. You have Sun Pharma. All of them are stocks on the back of positive news flow. While you have, the IT stocks, Happiest Minds Tech, you have Naveen Fluorine, MCX, and Pridmal Pharma, which will be reacting to negative news flow. So split down the middle.